Good morning and welcome to the ROX April 2020 Investor Webinar. It's a pleasure to be presenting on ROX following a period of strong achievements with the resource at our flagship UME Gold Project, reported this morning at 3.2 million ounces. So just draw your attention to the usual disclaimers and regarding forward-looking statements and JORC compliance. So turning to the snapshot of ROX, so we have a quality high-grade resource which we reported this morning at an update this morning at our flagship UME Gold Project that currently stands at 3.2 million ounces at 3.6 grams. But importantly, this includes a high-grade underground component of 2.2 million ounces at almost 7 grams. The resource is open along strike and down dip, with further growth likely with ongoing exploration. 41% of the resource sits in the indicated category as at April, and this is a key area of focus for us, growing that indicated category to underpin a reserve. So resource reserve definition drilling is ongoing, and we look forward to providing further updates on that in due course. The Albion process is the preferred method for treating our sulfide ore bodies, and we've managed in early test work to get 92.2% average gold extraction from the underground sulfide material. So our feasibility studies into development of the UME Gold Project are well advanced, and we'll look forward to putting out our scoping study in the middle of this year. We're also active more regionally, so at our Mount Fisher Gold Project, where we're likely to put an update out in coming weeks as assays are flowing in, but we're liking what we're seeing there so far. ROX trades on around $29 per attributable resource ounce following this resource upgrade, which we believe is a compelling valuation. So ROX's strategy is to add value through exploration success and resource growth, developing UME, and also delivering early cash flow opportunities through capital light developments at UME. So we've laid out here our timeline. These things are subject to change sometimes, but broadly the strategy remains the same. So just on ROX's vital corporate information, so we trade under the code RXL, market cap of 72 million currently, 6.9 million in cash. So we're well funded to meet our short-term objectives, and we're well supported by a strong group of shareholders. We have around 22% institutional ownership, and that's a key area of focus for us going forward to build that out. In terms of the team at ROX, so the board is made up by Stephen Dennis, myself, and John Mayer, and then we've built out the management team over the last couple of years. So Chris Hunt, CFO, Matt Ansell, General Manager of Operations, and Gregor Bennett, our Exploration Manager. The management team have experience in building mines and running mines and financing mines. So we've got the right people for our stage of development. So turning to the sector and where ROX sits at the moment. So as I mentioned previously, we're trading at around $29 per resource ounce, and looking across our peer comparisons and our peer gold producers, and it is a crowded space, with the gold price having been elevated for some time. However, we believe that we're trading at that compelling valuation, and that is likely to change as we move the UME project further towards development. So just a little bit more detail on UME. So ROX holds a 70% interest in the UME gold mine through the OYG joint venture, with Venus Metals, an ASX listed company, holding the other 30%. UME was a previous producer, producing 670,000 ounces at 5.4 grams through a series of open pits and an underground operation. And the operation closed in 1997 when the gold price was around 450 Aussie dollars an ounce. So, you know, looking through a lens of today's gold price of 2,700 Aussie an ounce, you know, the economics of the project are you know, vastly improved. In addition to just the broad economics, we've also added substantial ounces to the resource inventory there, having grown the resource from 1.2 million ounces to 3.2 million ounces since we've been involved since 2019. Interestingly, the last parcel of ore that was mined underground at UME in 1997 came out at an average grade of 14.6 grams. So that would be you know, a very, very high margin proposition at today's prices. We have an existing decline in place. We have substantial infrastructure around the site, so roads, bore fields, the village, all which give us a good head start in terms of development. So this morning's mineral resource update was in relation to the near surface resource. So that's the resource that sits between surface and 160 meters below ground level. And that's a resource that is likely to be exploited by open pits, with our underground resource being accessed off a decline separately. And the current conceptual studies see those being developed at the same time. So with this resource increase of 204,000 ounces in the near surface resource, that brings our resource increases for 2022 to 1.5 million ounces, bringing the total to 3.2 million ounces. And so we're happy with that resource growth, but you know, it's not finished yet, and exploration is ongoing. In terms of benchmarking the exploration team and how much it's costing to discover these ounces, so as a rolling average, we're tracking at about $7 per ounce in terms of discovery cost. For this near surface resource increase, the numbers of around $10 per ounce, you know, which is well below industry averages. So just looking at the resource in a little bit more detail and just offering a few observations. So there are multiple mineralized lodes at UME across around 2.2 kilometers of strike. These lodes sit along the margin of a granite and greenstone and typical Archean lode gold, you know, structurally controlled and sulfide replacement style ore body. We model the resource in two key categories. So near surface, which is 0 to 160, and then below that in the underground position. We use a cutoff grade of 0.5 for the near surface resource and a cutoff grade of 3 grams per tonne for the underground resource. So that gives you a tighter, higher grade resource for the underground, and that's reflected in this image on slide 11. So you can see here, this is shaded by grade and block grade, resource block grade, with much of the near surface resource being in the 0.5 to 1.5 gram per tonne category, with some high grade zones in there going up to 4 grams, and then the underground resource being for between, you know, at a cutoff of 3 grams per tonne, being around 7 grams per tonne on average, but you can see there's exceptionally high grade zones in there, with large areas that are over 10 grams per tonne. So that you know, that's where the stope optimizer you know, heads to first in terms of the mining schedule. The resource extends down to around 1,000 meters below the natural surface. Our focus is to drill out the top 500 meters. It's very expensive to drill out the deeper parts of the mine on a close enough spacing to get into indicated and measured resources. So we'll very much start with the top 500 meters and then drill the rest from underground. Just in terms of the near surface resource, a couple of observations that you know, a lot of that resource starts at surface, and in some areas is very high grade. No need for expensive pit cutbacks, or you know, and there are capital light type opportunities there in terms of early production. We have published the new resource this morning. that near surface resource is 4,000 ounces per vertical metre on average, just for the near surface. The deeps runs at a 2,900 ounces per vertical metre. So that is a good ounce endowment for an underground mine if you're benchmarking that against other West Australian operations. So we're very happy with how that's sitting, 4,000 ounces per vertical metre in the shallow part. Obviously, there's more ounces there because they're easier to drill and easier to get to. But we don't see, we can potentially see that 4,000 ounce endowment continuing at depth. So in terms of metallurgy, of these resources, there are two principal ore types at Youanmi. Non-sulfide, where nature's essentially done our work for us and oxidized the ore, and that goes through the standard CIL plant. And the near surface resource is non-sulfide and oxide. There's small amounts of transitional material in the deeper parts of that resource, but not a material amount of that number of that overall resource number. Then in the underground resource, we classify all of that as sulfide. And around 75% of the gold in that sulfide ore body is associated, is fine gold associated with pyrite, but doesn't sit in arsenopyrite. So it's not refractory in the in the traditional sense of the word. Around 25% of the gold in the underground resource is associated with arsenopyrite, and that requires additional oxidation. However, with our recent metallurgical test work, what we're saying is that we can get 92.2% extraction of that gold with an 8-hour Albion leach. So, fast leach kinetics. The gold is not too hard to get out, but does require additional oxidation. So, just further to that concept, this is how we see the gold deportment. So, near surface resource free milling, underground resource sulfide associated. So looking at a conceptual flow sheet, and this flow sheet will be built out as part of our scoping study and feasibility studies. But we see a dual purpose plant on site at Youanmi with an oxide circuit and a sulfide circuit. The sulfides are floated with around a 20% mass pull. So we're dealing with a high grade sulfide concentrate that then goes into the Albion leach circuit. The oxide material from the near surface resource goes straight through to standard CIL. In terms of the infrastructure that's on site and the head start that we've got a well-equipped camp, core farm, bore field, and that is a real head start. We've got an airstrip that we're using at present. And so all of that gives us capex saving. But importantly, the history of mining at Youanmi, adds to our technical understanding of dewatering, geotechnical pit wall angles that are required, what we're likely to see underground when we go underground, and that sort of thing. So it's been done before here, and that substantially de-risks the development. So just in terms of progress to date at Youanmi, so we've delivered a 93% increase in the resource to 3.2 million ounces. We've built out the management team. We've been actively drilling all through 2021 and 2022. We're actually at feasibility level understanding of many aspects of the project, with a scoping study to be released in the middle of this year and a feasibility study thereafter. And we're also not just studying the near mine environment, we're also looking further afield and regionally as well. So as we progress the project this year, one of the key areas of focus is resource development drilling. And you can see on this slide the key areas that we need to convert inferred into indicated material. And importantly, the resource remains open down dip and along strike. Just turning to the regional picture at Youanmi. So on this image, this is an aeromagnetic image, so it pulls out the rocks that are richer in iron, and it's a very good way to see the structural picture in a greenstone belt. So you can see this image is around 40 kilometres from north to south, and you can see the Youanmi Gold Project in the northern part of this image. And around 25 kilometres to the south of UME, you've got the Penny Gold Project, which is owned by Ramelius, and all the way along that structural corridor in the UME Greenstone Belt, there are good targets and strong targets that Rox has picked up in its recent air core drilling. So target area 1 is a key area to watch, and we're actively drilling out there now. So in terms of next steps for us, following this resource upgrade, we'll have a scoping study out in the middle of the year. We expect the project economics to be very robust, and certainly the early numbers are telling us that. And so, we're very confident about our development pathway for the UME Gold Project. We're at feasibility study level. We're at feasibility confidence level for a lot of the mining aspects of the project, with metallurgy yet to catch up, and that's an area of focus for us from here. We're not just studying the economics and the technical aspects of the project. We're also staying very active in terms of exploration out at UME. So just turning to Rox's second project, Mount Fisher, which is on the north eastern edge of the Yilgarn Craton. I've included it in this presentation, as a brief mention, but this is actually one of Rox's. Rox has had this project for since the mid 2000s. We discovered nickel there in 2012, and the focus shifted from gold to nickel, and Rox has only recently come back and started looking very seriously at the gold potential of this belt. And so we'll have more to say on our exploration up at Mount Fisher shortly, but fair to say we've had a large air core program out there, followed by an RC program, and we're very much liking what we're seeing out there. It's a big belt, 850 square kilometre ground position, prospective for both orogenic gold mineralisation and VMS style mineralisation, and we are active out there. So just to demonstrate some of the potential at Mount Fisher, you can see here I've included a long section of the historic Mount Fisher mine. You can see some of the grades that were pulled out of that were intersected in that near mine environment. 9 meters at 35, 8 meters at 14. I mean, these are pretty amazing grades. And the gold at Mount Fisher is associated with pyrrhotite. That means that we can use EM conductors to pick up the most important structures hosting gold, and so we're testing those EM plates now. So just as a recap, we're very happy with progress at our flagship UME Gold Project with the resource upgrade announced this morning. We're focused both on the open pit and the underground positions as development scenarios. The resources are open. There's 41% of the resource in indicated, which will grow over the coming months, and we're actively working through the metallurgical pathways to production there, with Albion showing very impressive metallurgical returns. We note that we are trading on a compelling valuation, and that the reasons for that gap to close are really development progress at UME, potential early cash flow opportunities which we're looking at, and ongoing exploration success. So with that, I thank you for your time, and encourage you to keep following the Rox story. Thank you.